Good morning, this is Anka Metcalf with TradeOutloud.com. Welcome to my pre-market game plan for the major future indices, gold and oil for today, Tuesday. It is March 7th. It is 8:58 a.m. Eastern Time. Yesterday's price action during the New York session took the price down to test the prior support area. Then it bounced back up, doing a little retest on the top of the range at 20,963, and then topped off. And the price, starting from about midnight, 1 o'clock, 2 o'clock in the morning, started to descend back to the bottom of this range and created support at 20,920. Now, from this point on, we are trading in a range and we should treat it as a range. And as such, every single pullback that we're going to get into the 20,920 is buyable all the way into the 50 and perhaps 60 area, but caution between 50 and 60 and be ready to trail very tight if you should take a trade on your own. A breakout over 20,965, and we talked about this area yesterday, can bring more upside to this pattern. And potential targets are going to be 21,000, 21,040, 20,050, 20,070, 21,000, and 21,100, and obviously into these highs, these peaks of 21,127 and 21,162. But before we even talk about the upside, let's talk about the current pattern that has established after this climactic run. So we had an all-time high of 21,162, and then we started to create lower lows and lower highs. Up until yesterday when the session started at 6 p.m. Eastern Time, which pretty much draw a support line at 20,890 area. That is sustainable. And what we see right here is the fact that we have stabilized the support area and that we're trying very, very hard to break above this range. However, this is a peekaboo high. Price came back down, created a higher low compared to the prior low that it was established from the beginning of the session on Sunday night, and that we're really trying to hold these support levels. Now, remember, trading is going to be difficult within this range, and shorting into the bottom of the range is going to be very, very tough. So with that being said, I'm not going to be interested in shorting off 20,925 or 920 all the way to the bottom of the range. However, I will be looking to see the price reaction into the bottom of the range and see if there would be an opportunity to buy it off these bottoms and send the price back to these highs of 50 and 60. So this is my game plan for today. Other than that, if we stabilize at this level at 920, a break above 42 is buyable with projected targets into the 50 and 60. However, trailing will be extremely tight, and we're going to look to bring our stop as close as possible to break even and as soon as possible, because of a possible failed breakout at this level. So you see how this whole cluster here is going to create a difficult environment for trading today. Let's take a look at the S&P 500. Pretty much the same pattern. We have taken the prior low, established a low at 2367, established another shelf of support 2370, and the breakout area that we're going to look at is going to be 2375, 2376. So it's within a point difference compared to yesterday's trading. Yesterday, we did have a peekaboo high into the New York session that sent the price higher into the 78, but soon it crashed back into the bottom of this space. And we also have the 200 moving average that caught price at this point. You can also see that the price is sandwiched, and we have a cluster here that is going to give us the clue as where the price is going to go today. So the price is sandwiched between these two moving averages. The support is 2370 and the resistance is 73 and change. So that makes it for a little bit of wider stop right here in the S&P 500, especially for a day trade, taking into consideration the fact that we have a very, very tight target area at 2375. I think that patience is going to be key today, and I think that we're waiting on tomorrow's job numbers, and we're also waiting on Friday's job numbers, as these are going to be catalysts for a possible rate hike coming up later this month at the FOMC meeting. So a break over 2375 can send the price higher into the 2383 area and possibly higher into the 89.95 and 2400 back again. Shorting is not going to be as easy in this area because we have a lot of support area, and also the support area is sustained also by these moving averages, and they're not going to give up this price support at this level that easily. But if we should break down, I'm not going to look to short at 70, and I'm going to look possible for a 50-50 shot or longer short here with a very tight stop. If the price should correct into the 2367, I'm going to look for a bounce, and if we're going to get a flurry to the downside into lunchtime, I'm going to look to fade the morning move for the upside during the lunchtime period. A break below 67 can bring more downside, but the risk to reward level is asymmetric. So with that being said, continuation to the 64, so you can see that there is a very, very tight target area from let's say from 67 all the way to 65, about 2 points, and then a flurry to 60. But that's going to be possibly it for the moment. It depends on the intensity of the move. Now let's take a look at NASDAQ. And NASDAQ has been hovering within the same range. So we have pretty much same kind of chart pattern across the board. Created a high, 5,400. And also we can see that it has formed support here at 5,350. A bounce off 5350 can project price into 55, and actually I would look for along this area as long as the current support level is holding. So a bounce over 55 with a projected target into, I would say 60, 62. So you can see that the risk to reward is not really that great in this area. To the downside, I'm not going to be overly bearish, taking into consideration that we have a very tight target all the way into 45, into 40 area. So unless we break above these highs or below these lows, trading is going to be rather difficult throughout the trading day today. Let's take a look at Russell. Russell has been the weakest so far, and is the only one that has tested a minor support area on the daily chart. We have a succession of lower highs and lower lows onto the hourly chart, and I think that until we break the 84 area, we're kind of like staying put and not doing anything in Russell, because we are on a lot of resistance and support. We're trading very close to resistance, and we're trading very close to support. So for that reason, the daily chart, like I said, when you're looking at the daily chart, you can see that pretty much we're trading within an inside range, which is not giving us odds for upside or downside. So we're pretty much going to have a sideways day until we break 1390 or 1375. So that's going to be the bracket for today. Let's move along and look at oil and see how oil is shaping up this morning. Don't forget, for those of you that are trading oil this afternoon, we have the API oil numbers that are coming out at 4:30 p.m. Eastern Time, so please apply caution. After a very choppy day yesterday, you can see these wicks that send the price higher into resistance, triggering a daily buy, and then back to support here within the extended session, 52.77. So we had a pretty wide range and a very choppy range in oil. Right now we got the first breakout over 53.50 area that triggered a daily buy. We're trading above prior day's range and above Friday's range, and we have a pretty impressive run of 1, 2, 3, 4, 5, 6, 7 candles to the upside, trying to take away the choppiness to the left hand side. Remember, oil remains in very, very choppy waters. All right, a bias right off the open is obviously higher, but we will have to wait for a pullback because we have so many candlesticks to the upside. We had an extensive run since 2 a.m. Eastern Time, and we're reaching a target area here at 81. So that's going to be a little bit difficult. So to take along in this area. Let's take a look at GC, and GC is continuing its trajectory to the downside, but we are 12.17, 12.20 actually, 12.20, 12.17 is support area for a lot of support area for price at this level. So keep in mind, if you plan on shorting, this would be the target, 12.20. It's trading right there at 12.20, 12.20.6, 0.7. It's where it's trading right now. So keep in mind that it doesn't have a lot of downside into this very, very hefty support area. You can see it right here. So from these prior highs, from this prior low, we have a lot of support area here. And this is going to be the line of the sand, because if we break below 12.16, we can have a continuation to the downside all the way to 1200. And for the upside, we would need a little bit more confirmation. So we would need to trade above 12.28 in order to have a move to the upside. So far, we have a continuation to the downside. The daily chart suggests that we're not done yet with the downward move, and the weekly chart suggests that a correction into 1200 area might be possible if the current price action continues and if we break 1218. This was all for today. Let me remind you that on Wednesday at 7 p.m. Eastern Time, we're hosting a webinar where we are going to offer an insight into our method of trading and our style and why futures is the way to go. We're going to talk about the advantages of trading futures, and a lot more information will be shared with you on Wednesday at 7 p.m. Eastern Time. So if you're interested in joining, visit our social media, visit Twitter or Facebook, and you're going to learn more about the registration process there, or send me an email at info@tradeoutloud.com and I will send you the link. Also, I want to remind you that we are getting ready for our next 6-day class, which is going to be hosted in April. It's going to be hosted in March. It's going to be 2 weeks from now, from the 20th to the 28th. It's going to be a 6-day event, jam-packed with a lot of information. It's a power income day trading futures class. If you want to learn more, you could visit our website, tradeoutloud.com/futures. If you're interested in registering for the class, finding out the class curriculum, or more information about how you can achieve your goals with this class, you can email me at info@tradeoutloud.com. More than happy to schedule a phone conversation with you, phone consultation with you. Thanks so much for joining, and I'll see you guys later.